What if I told you that the greatest investor of all time isn't Warren Buffett, George Soros, Michael Burry, or any of these household names? No, in fact, the best trader of all time doesn't even have a background in finance, and they're so peculiar in their ways that, like Albert Einstein, they refuse to wear socks because they take too much time to put on. If that piques your interest, we haven't even scratched the surface because this trader has generated such insane returns year over year that they have become not only an absolute legend, but also a complete mystery. Rarely ever giving interviews and now retired, this video is about picking up the breadcrumbs that this legend has left for us. It's a video about how looking left when everybody is looking right can make you insane amounts of money. Yes, this is the story of Jim Simons, a mathematician who became the greatest trader of all time. To understand how a legend becomes who they are, we have to go back to the start. Simons is now 85 years old, but was born on April 25th, 1938, to a Jewish family just outside of Boston. Fast forward a bit, and Simons got a bachelor's degree in mathematics from MIT, and would go on to get his PhD from Berkeley at an insane age of 23 years old. But Simons still being so young when he graduated, he wasn't ready to get a job just yet. It's actually right after he graduates that we first start to see the signs of Simons thinking for himself and not following the crowd. Rather than getting a job, probably what his parents wanted, Simons traveled all the way from Boston to Colombia on just a tiny little motor scooter. Now, I couldn't find any stories or videos of Simons talking about this trip, but this was back in the 1960s. Google Maps was not a thing, and going such a long distance on a tiny scooter, I can't imagine just how insane that trip must have been. Now, fast forward just a couple of years, and it's now 1964, and Simons is about to get what's probably the most insane job that a mathematician could get at the time. That's right, somehow, Simons started working for the NSA, the National Security Agency. To put this into perspective, Simons at the time was only 26 years old and started working for the government to crack codes. And in case you've already forgotten, yes, we are talking about the greatest trader of all time. Somebody who didn't get a degree in finance, didn't come from a rich family, and literally got his career start, by cracking codes for the government. Now, if this doesn't already have you reaching for your popcorn, I don't know what will, but the truth is, we've barely scratched the surface. This video is about how Simons made billions, and unfortunately, working for the government isn't going to get you there. You see, Simons was having a great career. Clearly a genius and somebody that the government was happy to work with, Simons could have ridden the gravy train for decades. But it's the 1960s, and the Vietnam War is well underway, and Simons was strongly against the war. So, at 29 years old, he happened to do an interview for Newsweek magazine, and not thinking much about it, when he was asked about the war, he said he was against it.
I was 29 years old at this time, and some kid came around said he was a stringer from Newsweek magazine, and he wanted to interview me and ask what I was doing about my views. And I told him that, I'm doing mostly mathematics now, and when the war is over, then I'll do mostly their stuff.
But when his boss found out, within 10 minutes, Simons was fired. And just like that, the path that had been laid out in front of Simons was shattered. But it didn't matter. As they say, hindsight is 20/20. And looking back, this was probably one of the best things that could have happened to Simons. Because without him knowing, now out of a job, he was about to transform into one of the greatest traders of all time. After getting fired, Simons served as chair of the math department at Stony Brook University for several years. But at 40 years old in 1978, everything was about to change. Simons had always had the dream of becoming wealthy, but the reality is, being the head of a math department is just not going to get you there. So, in 1978, he left. Simons decided that it was time to use his mathematical genius to make some money. And no, we're not talking about a few thousand, few 100,000, few million. No, we're not talking about small boy numbers here. We're talking billions. And in the world of finance, in order to make that much money, there's only one place for you: the world of hedge funds. Initially called Monometrics, Simons started his own hedge fund, but it wasn't anything crazy at the start. In fact, his first office was literally in a Long Island strip mall. But while it was a humble beginning, Simons didn't waste any time getting started. He started by first dabbling into currency trading, but rather than taking the typical route that most traders take, looking at the news, fundamental analysis, marking up charts, Simons took a completely different approach. In fact, in the late 1970s, what Simons was about to do had never even been done before. And as a result, he was about to change the entire hedge fund world forever. So, what exactly did he do? Rather than hiring people from Wall Street or recent finance graduates, Simons started hiring all types of people with non-financial backgrounds. We're talking mathematicians, physicists, statisticians, astronomers, and even computer scientists. Simons wanted to develop a unique edge, to look at the market from an angle that nobody had before. And in order to do that, he needed to hire minds that no other fund had. And the craziest thing is that it worked. Simons had all of these incredible minds develop a quantitative trading strategy. Rather than relying on emotion, news, or technical analysis, they started putting together absolutely massive data sets to see if they could recognize patterns, probabilities, or anything that could give them an edge. At the time, this was absolutely groundbreaking. Today, it's called quant trading, but at the time, there wasn't even a name for it. As Simons began gaining experience and momentum, 4 years later in 1982, he renamed the fund Renaissance Technologies. Over the next few years, they continued to gather and manipulate massive amounts of data to understand the market and develop their edge. But again, Simons was only just getting started, and even back then, he couldn't have even predicted what was about to happen, because in 1988, he launched the now legendary Medallion Fund. The fund that would go on to be his most successful, and to this day, is one of the most successful funds of all time. In 1988, Simons introduced at Renaissance the Medallion Fund, and for the next 2 decades, the Medallion Fund was the sole focus of Simons. The idea behind the fund was to take a very short-term trades on stocks, bonds, commodities, and currencies by finding faint signals through all of the data that they were collecting and processing. Through all of their research and data, they came to realize that shorter-term trades would make them way more money. Simons compared it to predicting the weather. It's much easier to say what the weather is going to do tomorrow or the day after than it is to predict what's going to happen in a month from now. And this hunch from Simons that it would be easier to predict shorter-term moves on the market was a massive success. It wasn't before long that Simons and the Medallion Fund were consistently cranking out annual returns of 40%. And word started to spread. Simons had more money coming into the fund than he possibly knew what to do with. Word was getting out and everybody wanted to park their money with Simons. But just when things were looking great, there was a problem. As more money started to roll in, Simons realized that the larger the fund grew, the worse the returns were going to be. With more money in the fund, it became more difficult to execute larger and larger positions, and the returns quickly were going to take a hit. And so Simons decided to do what in the finance world is essentially unheard of. When it comes to finance and funds, getting money is everything. But Simons decided to close the door. That's right. Simons realized that the Medallion Fund couldn't get bigger than $10 billion under management, or the results would begin to suffer. And so Simons started to return profits every single year to make sure that the fund didn't exceed $10 billion. Now, just for a second, let's have a little bit of perspective. We're talking about $10 billion, an insane amount of money, and annual returns of 40%. Over the last 100 years, the S&P 500 has generated an annual return of roughly 9%. 40% is literally unheard of. And this was coming from somebody that had zero financial background. Sure, today quant funds aren't uncommon, but go back to the 70s, the 80s. This was groundbreaking. And to make things even more insane, Simons didn't do this for just a couple of years. Simons was able to maintain these types of returns for decades. In fact, Simons was doing so well that it was impossible for word not to get out. Everybody wanted in on the party. The results and returns were just too hard to believe. But again, the fund couldn't exceed $10 billion under management or the results would start to suffer. And so at this point, Simons did something absolutely incredible. In fact, he did 2 incredible things in 2005. Rather than trying to bring in more capital and more funding like every other fund in the world does, in 2005, Simons decided to close it off to the public. Now, if you wanted to invest, you needed insider access. You needed to get invited. You needed to know somebody. In other words, these crazy, insane types of returns were now only available to the elite. But Simons, being a smart businessman, knew that by doing this, he was leaving money on the table. So that very same year, in 2005, he launched the Renaissance Institutional Equities Fund, the RIEF, which was open to outside investors. Here's how it worked. The original goal of the fund was to beat the S&P 500 by 4 to 6 percentage points every year. How was he going to do that? The fund would invest in stocks or instruments that were on an upward trend. It was a trend style of investing. And unlike the Medallion Fund that would enter very short-term trades, the RIEF would hold a position for as long as a year and with a lot less leverage. Now, Simons wasn't promising or guaranteeing that the RIEF would generate even close to the type of returns that the Medallion Fund was generating, but this is 2005, and Simons was already a living legend at the time. So as soon as word got out that he was opening a public fund, everybody just flocked to it. But here's the deal. Remember when Simon said that it's easier to predict the weather of what's going to happen tomorrow or the day after than what's going to happen in a month or 3 months? Well, of course, he was right. But the RIEF fund investing more long-term went directly against Simons' main philosophy, and it didn't take long for this to get exposed. In fact, the very definition of the fund eventually needed to change. Rather than trying to beat the S&P 500 by 4 to 6 percentage points, the definition was changed to a risk-adjusted return that on a gross basis would exceed the index over the long term. And if that wasn't frustrating enough for clients who had invested, the returns that they were seeing was enough to put them over the edge. While the RIEF has indeed performed better than the S&P 500 in 9 of the last 16 years, they experienced a massive 19% loss in 2020. But it was COVID, the market was crazy, so this shouldn't be unexpected, right? Well, it wouldn't be if the Medallion Fund in that very same year hadn't returned an absolutely insane 76%. Taking into account the loss that the public fund experienced in 2020, its annual return is now 9.1% with returns reinvested, whereas the S&P 500 has returned 9.7% annually over the very same period. So for the greatest trader of all time, what is going on here? In 2020 alone, Simons was the highest paid hedge fund manager in the world, earning an insane $2.6 billion. But everyone in his public fund lost almost 10%. Why is this? Why is it that only the insiders, the elites, get to experience these massive, life-changing amount of returns? Well, it turns out that Jim Simons, for all of his legendary trading accolades, isn't immune from controversy. Now, I personally haven't made billions of dollars, but if I had, I can imagine that the tax bill that I would be getting at the end of the year would be absolutely massive. And based on what Jim Simons has had to go through over the last few years, my hunch would be correct. Let's fast forward to 2014. Simons and his Medallion clients are on top of the world, having generated annual gross returns of 66.1%. His clients are getting rich, left, right, and center, but it turns out maybe something fishy was going on. That's right. In 2014, then Senator John McCain claimed that Renaissance Technologies avoided paying more than $6 billion in taxes by disguising its day-to-day stock trades as long-term investments. Fast forward, and in the last several years, Renaissance has spent millions of dollars lobbying to get Congress to change the tax codes for hedge funds. This is just one way that the rich get richer, but at the end of the day, you can't blame Simons. He's putting his money to work, and for him, investing millions of dollars in lobbying Congress is only pennies. It's drops in the bucket. But it's not just drops in the bucket for Simons because he's a successful trader and a very well-known hedge fund manager. It turns out it's drops in the bucket because after I did a little bit more research, Simons actually charges the highest fees in the entire world. It's absolutely insane.
You know, people would ask me, what's a hedge fund? And I say, 1 in 20. I mean, which means now it's 2 in 20. But, you know, it's 2% fixed fee and 20% of profits. Hedge funds are all different kind of creatures.
Rumor has it you charge slightly higher fees than that.
We charge higher fees, yeah. We charge the highest fees in the world at one time. 5 and 44. That's what we charge.
And with all of that money coming in from fees, Simons hasn't only spent it on lobbying Congress to change certain tax codes. No, he's also been a massive donor to the Democratic Party. He even donated $7 million to Hillary Clinton's Priorities USA action campaign, which makes you wonder if maybe he's losing his marbles in his old age. But I digress. Since 2006, he's donated over $30 million to federal campaigns, and since 1990, Renaissance Technologies has donated almost $60 million. And if you're wondering if there's any FTX, Sam Bankman-Fried type thing going on here, well, you might be right. Because here's the kicker. It turns out, going back to 2014, John McCain was actually onto something. Because over the last few years, Simons and Renaissance have been dealing with one of the largest IRS disputes in history. The IRS claimed that Renaissance used a tax loophole that saved them an estimated $6.8 billion in taxes over roughly a decade. And after fighting it for several years, in 2021, it was announced that Simons and colleagues would have to pay billions of dollars back in taxes, penalties, and interest. So while it ended better than it did for Sam Bankman-Fried, it looks like finance companies donating millions of dollars to the government could be to hide something. All that to say, Simons is now in his mid-80s and is retired, but he will forever remain a guidepost for two pivotal lessons. First, the value of contrarian thinking, of looking left when everyone is looking right, and just how much money that can make you. And second, that the status quo can be challenged and it can be changed. Simons entered an industry with zero finance background, and he did better than anybody ever had before. And if you want to learn about the world's very first billionaire, check out this video here. If you made it this far, I appreciate it. See you in the next one. Until then, peace.